Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. I'm speaking with Tyron Breytenbach, CEO of Lithium Africa. Hi, Tyron.
Hi, good afternoon. Thanks for making time.
Yes, good to see you. So this is the first time that we're having a conversation about your company. Maybe we can start off our discussion with just the value proposition. What makes Lithium Africa unique in a sea of investment opportunities?
No problem. So we're going public now at what we think is the bottom of the market. Lithium Africa is unique in that we're shooting for the front end of the Lassonde curve. So we're trying to create value by discovery. We believe that if you discover a world-class ore body, whether it's in a bull market or a bear market, the stock's going to go up. We're partnered with a very well-capitalized senior chemical company called Ganfeng, and they match us dollar for dollar on our exploration part. So we're diversified. We have a business model that's counter-cyclical, and we're willing to take advantage of this weak market. And I think that gives us an edge on some of our peers.
All of your projects are located in Africa. Why have you chosen to focus on this jurisdiction?
So the lithium world has become very politicized. You're seeing supply chains be organized either around China or Western economies. We've dumbed it down and said, we're going to go to wherever we think we have the best chance of finding a high-grade, bulk tonnage, low-cost, long-lived deposit. And we feel that Africa has the right geology, but has seen only a fraction of the exploration budget of places like Australia, particularly Western Australia and Northern Canada. So despite these limited budgets, Africa has produced some of the largest tin and tantalum deposits on the planet. Lithium is often co-located with tin and tantalum. So to us, it's a statistical exercise of applying knowledge, geological knowledge, and capital, and we will make these discoveries. The other reason we've chosen Africa is it's very inexpensive to do business, okay? And there's a will to actually permit projects. So in Northern Canada right now, you're looking at, I think the latest stats say a 13-year timeline from the first drill hole to actually putting a mine into production. The biggest mine that's currently in operation in Africa, Goulamina, which is in Mali, and yes, there are other risks that we need to be cognizant of, and we deal with that via diversification. So we're in 7 countries right now in Africa, going to 8. There's a will to permit these assets and actually put them into production. So every jurisdiction has risk, but we can manage the risk in Africa. But we think it's a place where mines still get built, and they get built very quickly.
As a company, what macroeconomic or industry trends are you watching that you think impacts your company moving forward?
Yeah, so the last lithium boom cycle was kind of broken with all the supply that came online. A lot of the supply that came online, was either sort of the gray market in Africa. Domestic lepidolite mines in China has been a huge talking point. We view this as unprofitable, unsustainable production that's kind of manipulating the price to some extent and shutting off capital from some of the Western mining companies. But I just look at the number of EVs being sold. So perhaps it's not growing at the same rate, but it is growing. And at some point, even the most modest demand forecast is going to bust through the current short-term new sources of supply. So I look at those trends. I also look at the electrification of trucks and buses. This is a new demand source that's not in the current demand model. Another recent talking point has been BESS, so battery energy storage solutions. So you're seeing a lot of the world switch to solar because solar is inexpensive. The costs associated with solar are reducing every month, okay? But solar only works if you can pair that up with the battery. And that's been a big new source of demand. And so I think, we're having this conversation in June 2024. I think we've marked the bottom here. I don't think it's going to be a hockey stick shaped curve out of this, but the last couple of years has been an interesting time for us to actually go out there and build our resource base when there hasn't been a lot of competition. So those are the macro data points that we're watching.
You mentioned earlier about your Ganfeng partnership. Could you maybe elaborate on this and maybe talk a little bit more in that same thread? What your strategy are for increasing shareholder value?
Absolutely. So we've embraced the joint venture model. So, joint venture is actually not that common in the gold space. But in a commodity like lithium, that's not really a commodity; it's more of a chemical. Different deposits have different customers. You need to be a chemical expert. You need to understand downstream. So you need to understand transport. You need to understand conversion. You need to understand battery chemistry. That's not what exploration companies do. So I think if you're a lithium exploration company, you're taking on a lot of downstream risk that you can't control. So by partnering with Ganfeng, we're bringing that intelligence in-house. Ganfeng's objective is to be a leader in the battery grade lithium business. Okay, and to do that, they need exposure to the upstream side of the business. So mines, mineral resource deposits, and now with us, they're actually going even further upstream into the exploration business. So I think they see the value of us making a discovery, being a low-cost source of lithium precursor for them, and we can take advantage of the capital, the chemical expertise. So, for example, if we're drilling a deposit in Zimbabwe, very early on in our program, we can bring in Ganfeng to have a look at the mineralogy, and if ultimately it's not a conducive to high quality concentrate, we can jump ship and move on to another project. Even more important is we get to leverage their capital. So I go to my investors and I raise $10 million. Okay, I then push that down to the joint venture, but it funds $20 million of exploration. So if we're in a tough market and capital is scarce, Ganfeng benefits from institutional investors' capital. Institutional investors benefit from Ganfeng's capital. And so we get to limit our dilution. And so when we make that discovery one day, we've got a very low share count. So when we go public, we're going to have less than 20 million shares. That's rare on the TSXV, and that's by design, and that's because we've embraced the joint venture. And then one day when we have to go and engineer and build a mine, that's a capital intensive project, and that's when we might even bring in a third partner in addition to Ganfeng.
And you mentioned, that limited lithium market at the moment. From an exploration company's perspective, like how are you handling the current bear market in the lithium sector?
So we're fortunate that we can create a lot of value for tens of thousands, even hundreds of thousands of dollars. So I'll give you an example. So 3 years ago, a 5 to 10 million ton resource in Zimbabwe would have changed hands for $10 million. Okay, we could pick something like that up today for 50, maybe 100 grand. Okay, we've got access to drills, we've got access to people. So everyone's a lot more negotiable when it comes to cutting a deal. Secondly, a lot of our exploration is true greenfields, where we're stepping onto the ground for the first time. We've picked the ground using satellite imagery, historical colonial databases, and often we're the first person putting in a drill hole. Okay, and if you convert moose pasture to a 100-meter mineralized lithium interval, in my opinion, you've just created tens of millions of dollars of value for an exploration budget of a few $100,000. Okay, so this is a risky business, but when you do hit, you hit big. And so we expect to fail 80% of the time, but the 20% of the time that we win, we're generating, hopefully, company makers of an asset. And we manage that risk by diversification. So what I tell investors is every year, we're going to hit 7 targets, and we're going to be the first company hitting those targets, and we just need one of those to work. And so we've had a couple of sniffs. We've generated a few small resources, and our goal is to expose investors to the next big one because they are in Africa, and I think we're the first boots on the ground, and a lot of these targets, we're going to be the first company sticking a drill hole into the showing.
And in reverse of that, like from an investor's perspective in this current bear market, why is now the time to invest? Maybe articulate that a little bit more. Why now is the time to invest in Lithium Africa or in the lithium sector in general?
Absolutely. So I think there's different kinds of investors. Okay, so if you look at a hedge fund, they're kind of chasing quarter-to-quarter returns, right? And they might be looking for more momentum. I look at someone like Rio Tinto. I believe they're the second biggest miner of commodities on the planet. They don't often do external deals, okay? And late last year, they did the Arcadium transaction, which is the second largest transaction in corporate history, and they've picked lithium. Shortly after that, they followed on with a big multi-billion-dollar investment in Chile. Again, the commodity they picked was lithium. So, Rio Tinto sells a lot of commodities to the East. I think they've got their pulse on the macro, and they're building their business around lithium. So I think if you're a real true contrarian and you're thinking about the next 3 years, not the next 3 months, lithium's very, very interesting because the stocks are in the toilet. They've been completely shut out of the capital markets. What's interesting about the Lithium Africa business model is because our partner is a lithium mining company that's going to be here for the next 20, 30, 40 infinite years, they understand what we're trying to do. They're willing to invest for the long term. So we're planting the seeds now that investors are going to reap when the next bull market comes back. So my vision for Lithium Africa is I think 6 to 18 months from now, the market comes back, right? And the lithium space has had some violent rallies. And I think when the market comes back, we're going to be the leader in Africa. We're going to have a low share count. We will have a lot of experience. We will have done some good deals that in retrospect will look like a steal. So right now we're completing an RTO. So this has all been announced. We will go public around August. As part of that, we're going to do a concurrent financing. And what we've done with this financing is we've, purposely aligned with long-term investors, and we're going to do a warrant. We're going to do a 5-year warrant because we understand investors need to be incentivized and compensated for taking on that time risk. And the best way to do that is with a premium priced warrant, so they get exposure to that turnaround.
So what are some of the, aside from the one, what you've mentioned, what are some of the other upcoming catalysts should investors watch for in the near future?
So at any given time, we have 3 or 4 due diligence teams running around Africa. So there's a lot of very exciting assets where we're close to cutting a deal that we can kind of bring into the public sphere. So we're a very, very dynamic company. I'd say if I think about today, what am I most excited about? We've just completed reconnaissance in Guinea. Okay, Guinea is a country that we think is wildly prospective for lithium. No one else is looking for it. No one else has launched an exploration program. The infrastructure in the country is getting better all the time. Last year, the Chinese in Rio announced a big railway line. The gold companies in Guinea have finally started to get a bid. I think people are figuring out that Guinea is a really good place to do business and very, very prospective. So we're there, right at the sharp end of the spear. We're seeing 20-meter wide, spodumene zones sticking out of the ground, and no one's ever looked at them. So that's very, very exciting. We're looking at a similar scenario in Morocco. So I think in a couple of months we can show firm drill targets, collar locations at 3 or 4 new lithium pegmatite fields that the market wasn't even aware of. So I think that could be a big catalyst. I think just going public, having a ticker, going to conferences, getting the word out. We've kind of been a private company for 3 years, sort of hiding under a rock. That's going to change. But nothing gets the stock moving and draws eyeballs like drill results. And so I think that's going to be our primary way of attracting attention.
Great. We'll leave it at that, and good luck on going public. Thanks again, Tyron, for taking the time to speak with me.
Likewise, thank you for the questions.
And thanks everyone for watching. Join us again next time for another edition of CEO Insights.